Hello, welcome to Price Action Expert. This is Prabha here. Good morning, good afternoon, and good evening to everyone. Today we are going to discuss about how to calculate the risk before you enter any trade. Okay, I will show you how to predetermine and pre-plan and analyze your entries. Your risk should be predetermined. You should know your lot size too. Let me start with the GBP JPY pair. See, let's say if you have a $5,000 account here, which I invested in US dollars. This is actually demo. I'm just showing it for educational purpose. Let's consider, let's imagine that you have invested $5,000 in. Okay, if you are going to take an entry here, you should know your stop loss and lot size actually. Let's say we're going to place 200 pips stop loss here. Okay, what would be the risk? See, always before you enter a trade, try to take only 1% risk. Okay, in that way you'd be very much safer and you can trade without emotions. It would be an emotion free trade and it will be a long term trade, so you not make any mistakes. Try to trade in bigger time frames, bigger time frame in the sense H4 and above, daily, weekly. Analyze in that and try to enter in smaller time frames. Okay, see here, use stop losses always 100 pips or 150 pips or 200 pips or more. Okay, use higher time frame for analysis. Okay, mentioned earlier. See, before you enter the trade, always know your stop loss and lot size. Now I will show you how to calculate this. Okay, see, go to Google and type lot size calculator. After that, you can see my FX book and baby whips here. You can take any one. Let's say you're doing it in my FX book. Okay, once this opens, you can see these options: current account currency in which you have invested, in which broker, and what type of currency you have invested. I invested in US dollars. Let's say US dollars, and account size. Account size is actually 5,000 US dollars, which I mentioned earlier. 5,000. Let's type 5,000 here. The risk ratio. See, I'm stressing this again and again and again to all my members and all my students. Always use 1% risk. At very rare condition, go for 2% risk. I mean, if you are in profits, if you have made some profits and it's already you've been winning continuously, in that stage you can go for 2% risk. But I would normally stick to 1%, which would be very safe, even in extreme volatile conditions and any other conditions too. Okay, 1% risk here and stop loss. Let's say we are keeping it to 100 pips for example. Currency pair. I've shown a GBP JPY pair. Let's take that and click calculate here. That's it. It's done. So your risk could be 1% risk for 5,000 is $50. 1% of 5,000 is actually $50. That's what 1% risk means. Okay. See here, $50. This would this would be the amount that you would lose, or you'd be losing if you take trade based on 1% risk with the stop loss of 100 pips. See, the stop loss actually determines your determines your risk. Okay, let's see. The lot is 0.055. Let's say we're going to take buy in this. Okay, 0.055 by BJP pair, and your stop loss is 100 pips. Yes, this will be the amount that you will be losing if your trade hits the stop loss. This is actually less than 1% risk. It is very low because of the spread here. Okay, GBP JPY. See, we have we have calculated that actually 1% is $50. 1% is actually $50, but because of spread in the broker, it shows that it's 45. If you want, you can adjust it to $50, approximately $50. Yes, okay. And that would be 110 pips actually. See, once I place my cursor above the stop loss, you can see what would be the profit and what would be the pips. You can adjust accordingly. See, actually, take profit is actually not a matter here. You can place same exact 120 pips, $50. Leave it, or if you want, you can place it to 100 pips, $100. I mean 220 pips. It is based on our analysis. Okay, I'm just showing this as an example how to predetermine. See, once you have placed this, you just leave it. You don't have to change or adapt or modify it. Once you have placed, you know that you are going to lose only 1% of your money. Just be ready for it. Okay. So you don't have to worry more. You can be more relaxed and you can trade stressless, as I mentioned earlier. For better option, you can go for I mean 200 stop loss. Okay, I will show you how to do that. Uh, this is 5,000 account. Let's say we are going to $10,000 account. I already placed a trade here. See here actually. This is actually 200 pips. Okay, 1:1 ratio. Stop loss is 200 pips. See the pips around. Don't get confused. See here. Pips. I have placed the cursor on the take profit line and it shows 200 pips and 6 points actually. Approximately I have done it. Let's show you in this. Let's see our account size is now $10,000. Risk is 1%. Let's say if you are doing it for 1% for 200 pips now. Last time you did for 100 pips stop loss. Now we're doing it for 200 pips stop loss. In GBP JPY pair and calculate. Okay, 0.055 is the stop loss here. There is a lot size here for the stop loss of 200 pips here. Okay, Let's say we are doing it for 2%. For $10,000 account, I'm taking 2% risk here with a stop loss of 200. Okay, the lot size would be 0.111. The money you would lose if it hits the stop loss is 200. See here, exactly you have done it. I have placed it. 2% risk, $10,000 account. Yes, that's it. Just now I have modified it to $200. Profit would be, let's say we're doing it for 1:2 ratio. Okay, that's it. Okay, I'll show you one more. Okay, I'm going to show you one more account here. In this account, actually we have 2,358 US dollars. See, actually, while you're calculating, the exact money is important. Pips could vary, but see, if you see this alone, you can able to know what would be the 1% risk. The 10% is $235.8 actually. The 1% risk would be 23.58. Okay, 2358. So what I'm saying is 2358. Okay, that is your capital. See, if you place one decimal before the 8, that would be 10%. Okay, this is the 10% of your total money. If you place after 2 digits, see here, after 2 digits, this would be 1% risk. 1% of the total amount. Okay, this is the easier way to calculate the percentage. So if you want to know the lot size, that's why we are using the calculator to do so. Okay, I'll show you now. Let me clean this up. Okay. Okay, for 2358 account size, let's calculate 2358. 2358. This could be 1%, and stop loss, let's say it's 100. Okay, calculate. See exactly what I told you earlier. 23.58. That would be the dollar that you lose if it hits the 100 pip stop loss, and your lot size would be 0.026. Okay, this we're going to place 0.026. Same by here. The stop loss would be 100 pips. See, when I'm placing 100 pips approximately, it shows that actually 18.22 US dollars because of the spread issues. If you want, you can change it to 23.58. 23 point approximately, let's place it. Okay, that would be fine. 23.79. You can modify if you want 1 or 2 points. Yes, 23.68 approximately. Yes, if you want, you can keep your take profits to 200, 300, 400 pips. It's based on an analysis. It's up to you to decide. So which matters is actually the stop loss and lot size. It actually matters. You should know how to calculate this. Everyone should know this. This is the point of creating this video actually. Okay. See, Margaret, I have posted few things here. Let's see this actually. Okay, always try to use bigger stop losses. Okay, always. I mean, like above 150 pips or 200 pips. I would normally use 200 pips as my default stop loss. Okay. Okay. Use higher time frame for analysis. Before you enter the trade, always know your stop loss and lot size, which we have discussed few minutes before. And see, many traders they use smaller time frames. Don't do that. Actually, it is not recommended at all. If you're expert, like you have a knowledge of knowledge and experience of 5 to 6 years, you can trade smaller time frames. Even in smaller time frames, they enter based on the trend of uh, bigger time frames only. For example, if the direction of the trend in a particular pair, like Euro USD is in buy in daily and weekly, you can enter buy in smaller time frames. Okay, that's how it works actually. Most of the time, 10 pips, 30 pips, you could get trapped very easily. Do not increase your lot size. Yes, usually once when a trader enters a trade and he places the stop loss, what he does is he tries to change that. Or what he does that after once it is in profits, he tries to increase the lot size. You should not increase the lot size at all. You should predetermine the risk, which I have shown you earlier, and try to stick to that. Okay. See here. The next point is actually you should increase your capital. Okay. See here. Don't increase your lot size. Actually, you should increase your capital. That means if you could able to make 5% to 10% in a month consistently, or in a year, if you could able to make 50 to 60%, you are invested in $10,000. Okay, I'll show you by few examples which I have wrote few articles. You can see that for better explanation. Okay, how see here. Yes, I mean how 10% of profit is good enough in trading. I have shown some calculations in that. Please do read it, and it will be of very helpful. This one, the second one, third one. This I have mentioned about mastering long term, trading higher time frame or trading multiple market or pairs, which is the better one. I have detailedly explained this. Benefits of trading in one pair, trading long term and on one pair trading benefits. Okay. So my point is that if you see here, do not increase the lot size actually. That's what I was saying. If you increase your capital, if you have $10,000 and if you could make 10%, okay, that would be $100. $100 is 1%, so 10% is $1,000. If you could make $1,000 every month, do not increase your lot size actually. Uh, it's proven that you are already a consistent trader. What you have to do is you have to increase your capital. Once you increase your capital from $10,000 to $50,000, 10% of $50,000 is actually $5,000. So if you keep increasing your knowledge and capital, and if you are consistent, you can make good money. I mean, you can even become a millionaire and billionaire in that. Just try to follow that always. I hope that I sincerely hope that Most of you would be very clear how to calculate risk and place your stops before entering, and try to follow this in each and every account, and you will be always consistent, and you will be very well disciplined. Okay, if you have any doubts, please contact me. This is Prabha signing off. Take care.